On this episode of Center for Tax Studies Individual Income Tax course, we're going to be discussing filing procedures. We're going to discuss which tax returns you should choose from, either the 1040, the 1040EZ, or the 1040A. We're going to talk about e-filing and how to go about doing that, as well as where and when to file. And lastly, modes of payment. So let's get started. Okay, so the first thing that we're going to do is we're going to discuss the different types of forms that you can use as an individual. And the first being the 1040EZ. It is named that way for a particular reason, and that's because it's an easier form to use. So when can you actually use this tax return to be able to file your income taxes? Well, you must meet the following conditions. You are either single or married filing jointly. You don't get to be head of household under this situation, and you cannot file separately. You have no dependents. You don't claim any adjustments to income, and then other than the earned income credit, you don't get to take any other credits. That you don't get to take the additional standard deduction, so if you are blind or over the age of 65, you won't want this particular tax form. And your taxable income must be less than $100,000. Only wages and salaries, and taxable interest only if it wasn't over $1,500. You didn't pay a household employee, such as a caretaker, can't have filed Chapter 11 bankruptcy, and you cannot itemize. As you can see here, this is the 1040EZ. And as you'll notice, the tax return is a little bit easier to fill out. There is just very basic information about income, types of payments that you've made for withholding on a W-2, or your quarterly estimates for a 1099, as well as credits that you are able to take. We then go down a little bit further and you can see the refund that would be owed to you or the amount of tax that you owe. And then you sign and you send it into the IRS. That's it. It's a one-page 1040EZ form. Now what about the 1040A? What is this? Well, if you can't use the 1040EZ, you may still be able to use the 1040A if you have income from a couple additional sources, as is shown here, as well as you can only claim adjustments to your income if you had an IRA deduction, student loan interest, educator expenses deductions, or tuition and fees deductions. You cannot itemize as well in the 1040A, and your income again must be less than $100,000. Now, you can take a couple of additional credits, including the credit for child and dependent care expenses, the credit for elderly or for the disabled, educational credits, the earned income credit, as well as the health premium tax credit. Lastly, you don't have any alternative minimum tax. This is an additional tax assessed on individuals who make too much money that the government has decided to impose so as to make things a little bit fairer. Here is an example of the 1040A. So as you can see, it's a little bit different from the 1040EZ. It has a little bit more information. You can claim a dependent here. Additional types of income are allowed, and you have additional adjustments to your income in the form of these types of deductions. You get additional credits as well, and then it ends with your refund due to you or your amount owed. Similar type of tax return, just a little bit of additional information. Okay, so now if you do not qualify to take the 1040A or the 1040EZ, there is the most popular tax form, and that is Form 1040. So let's get into what this looks like. So you must use the 1040 form under certain circumstances, including your income is higher than $100,000. You have a business or have self-employed income. You are a partner of a partnership or an S corporation or beneficiary of an estate or trust. Here, you can finally itemize so that you can reduce your income further and you owe household employment taxes, such as you hire an au pair or a nanny or something like that. Here you'll see a couple of instances where you must use the 1040. My favorite is that you received an Olympic or Paralympic medal from the United States Olympic Committee prize money, or on account of your participation in the Olympics or the Paralympics. So that's really cool. Now you know when you have to file a 1040, and let's just look at the 1040 for a second. As you can see here, there's more information that you must include. You can take a dependent or multiple dependents. You also, if you file separately or you are head of household, here you must file the 1040. Your income options are much more diverse, and your deductions are much more diverse as well. Then you reduce your income by additional deductions, including the itemized deduction and other types of credits. Also, notice here on line 57, if you have self-employment tax, this is where you would put the amount of tax that you owe. I wanted to also mention that with each of the tax returns, you will still have to file separate schedules. Schedules are additional forms that you have to fill out when you are filing your tax return to provide the IRS with additional information on specific line items. And so with the 1040, you have many different types of schedules: Schedule SE, Schedule H, Form 5405, etc. Now we get to the bottom of the tax return. You have what your withholding or 1099 quarterly estimates were, as well as different types of credits. And then you have the same thing as each of the other returns, your refund owed to you or the amount of tax that you owe to the federal government. And then you sign each of these returns under penalty of perjury that all of the information contained in the tax return is correct. All right, so let's go into how you e-file. So what is e-filing? Well, e-filing is actually a relatively new way of filing your tax return. It started in 1989, where it was rolled out to 36 states, and then it was rolled out nationwide in 1990. Now, you can file your tax return yourself with the use of free file software. You can go on to the IRS website and look up free file, and you can use their software to be able to file your return as well as your state return for free. You must make below $64,000 in order to use this free filing software. Now, if you make more than $64,000, there are free file fillable forms. Again, you can use the IRS to use these free forms. You must know how to do your taxes yourself, so good thing that these episodes are online so that you can figure out how to do your own tax return. But it does do the math for you, even though it offers only basic guidance. Here with the free file fillable forms, say that 4 times fast, you do not get the state tax returns for free. Now, the other way that you can e-file your tax return is you can use commercial tax return software. There is a fee, but it is fairly reasonable, and it provides a step-by-step guidance through your tax preparation, through guided questions, etc. There are several software programs such as H&R Block, TurboTax, TaxAct, etc. that you can use to then file your tax return. Additionally, you can use tax professionals who will do the tax preparation for you. These include local CPAs. If you have more complex issues, you can then use a Big Four accounting firm such as Ernst & Young, PricewaterhouseCoopers, etc. Or for issues where you are concerned about criminal issues or that have business transactions involved in it, I would also recommend a tax attorney. Now, when choosing a CPA or a tax attorney, you want to ask the questions that you need to be able to feel comfortable working with them. You need to make sure that they are credible, that they have a good reputation in the community. Find out the information that would concern you if you are to give your financial information to that tax professional. Also, beware of tax professionals who may say, oh yes, we can provide you with all sorts of stuff and we can guarantee a refund. There is no guarantee to a refund, and therefore you want to be wary of anyone who provides you with tax planning that seems too good to be true, because it probably is too good to be true. When you e-file, you still have to sign under penalty of perjury that the information that you have provided on your tax return is correct. When e-filing, you provide an electronic return signature using a personal identification number, a self-selected PIN. You must also sign a Form 8879, which is the IRS's e-file signature authorization, which authorizes a tax preparer to generate a PIN, or a personal identification number, for you. Now, the advantages of e-filing is that it eliminates reporting errors. Therefore, the IRS can quickly go through all of the returns that are in your name and your identification number to eliminate those errors. It also reduces the time required for processing a refund to about three or so weeks. One of the disadvantages is that it provides no proof of filing. And proof of filing is important because if you don't have that proof, such as a return receipt request from the post office, you cannot show that that return was actually filed. And back when e-filing first started, the software went down and there became a problem with many taxpayers who found out that based off of the software glitch, they didn't file a tax return even though they had a receipt number. All right, now let's get to when and where to file. The due date for individuals to file their tax return is typically April 15th, or the 15th day of the 4th month following the close of the tax year. However, this can change if April 15th is on a weekend or a holiday, and it is then moved to the following business day. A tax return is timely filed if it is mailed to the proper address, which is the IRS Regional Service Center listed in the instructions for each type of return, or which is contained in the software application that you're using. It has to have sufficient postage to actually get there, and it's postmarked on or before the due date. So at a lot of post offices on April 15th, they extend their hours to allow individuals to be able to pay their taxes. And there can be parties at these things, which is kind of funny. I don't know why there would be a party for filing a tax return, but to each their own. Now, there is an extension. You can file Form 4868, which is the application for automatic extension of time to file the U.S. individual income tax return. It's a 6-month extension of time, and this Form 4868 must be filed by April 15th. However, filing this form does not extend the deadline for paying any taxes that are due. So you must, as you file this Form 4868, you must pay any tax that you believe is owed to the government. Now, if you did not file an extension or timely file, you can incur failure to pay penalties and interest beginning on April 15th. Now, let's say that there was an issue with your individual income tax return. You can file an amended return. It's Form 1040X, and this form must be filed within, whichever is later, 3 years of the filing date of the original return or 2 years from the time the tax was paid. What modes of payment do you have? Well, you can send in a check or money order made out to the United States Treasury. You can use IRS Direct Pay, which electronically withdraws funds from your bank account. Or you can use the Electronic Federal Tax Payment System. Now, the Electronic Federal Tax Payment System, or ETPS, is more secure. It has 128-bit encryption, and you must have 3 pieces of authentication with unique information, including either your EIN or social security number, your PIN, and an internet password. Here you'll also see the website links that you can use to be able to use those payment methods. And you can use a credit card with these other types of payment methods to pay your federal income taxes. So that is the most important information that you need to know about filing your tax return, paying for your tax return, and which tax return to actually use to file. I hope you enjoyed this episode, and if you did, please give it a thumbs up and subscribe. If you have any questions, feel free to contact me at centerfortaxstudies@gmail.com, or you can leave a comment in the comment box below and I'll be happy to answer. Thank you so much for watching, and we'll see you soon.